Welcome back to E-commerce on Tap, brought to you by Sourcify. I'm your host, Nathan, and I'm joined by my co-host, Aaron from ISBA. Aaron, what's going on?
Doing great, man. How are you doing?
Excited for this. I know we've got a big episode here. We've done a deep dive. You've brought so much data to the table about jewelry sourcing, about this really unique, high growth e-commerce jewelry brand. I don't know if we should say the name right now or leave it as a cliffhanger because I know first we're going to touch on current news. What has been top of mind for you this past week?
Yeah, I've been paying a lot of attention to just the job market in supply chain tech. So there's a few interesting tidbits I saw. So the first one was the just analysis about the amount of VC funding that's gone into supply chain tech. I think about a year ago or 2 years ago, it was like $5 billion. And this past year, it was only $780 million. And so the funding machine has kind of dried up. With that, you're seeing layoffs at Flex and Convoy obviously shut down. But a lot of the supply chain tech companies that I'm close with are also feeling the pinch. Flexport just announced another layoff. I think it's like their third layoff in 6 or 7 months. And so there's a lot of interesting things that are kind of coming to bear on this. What I'm seeing, it's not just the supply chain tech folks. Big manufacturers like Plexus, Flextronic, Celestica, they are actually also laying off people. And so that's been an interesting kind of dynamic we're seeing play out.
Yeah, I'm curious. I mean, when it comes to these tech-oriented supply chain layoffs like Flexport, I mean, do you think it's that they mispaired technology and supply chain functions? Because, like, okay, even if you layer on nice software on top of freight, at the end of the day, there still has to be people that move that freight, right? I mean, the container's not going to move itself. There's still a cargo ship involved. And though it's a nice to have, I just am curious, even with Convoy as an example too, with, you know, freight forwarding on the LTL side and the trucking they were targeting, like, do you think that thesis was wrong or just they mismanaged their capital, or what do you think happened there?
Yeah, I actually did a whole deep dive on Convoy and their collapse late last year. I think without going into all of that tangent, I think that there are two things happened at the same time for a lot of these supply chain tech companies. The first one is they went from very high freight rates to back to normal pretty quickly, like in a matter of less than a year. So you saw this collapse, and the fundamental value of the unit they were moving was cut by 80%. The other thing that happened at the same time is that it became unsexy to be a money-losing company, and you had to be profitable from the get-go. And so you have something where your base amount of revenue that you're able to bring in is shrinking, and then you've got a capital structure and a financing structure that's upside down. And so you're forced to compete on the same playing field that incumbents have played with. And so I think that those are the two things that have really pushed people to reevaluate and try to hunker down and just get through it.
Yeah, I tend to agree. I mean, what I've seen this past week that I thought was so interesting is, I think a lot of e-commerce brands in today's world use TikTok as a viral channel, right? I mean, the growth of TikTok for e-commerce brands, I think, has been pretty tremendous the past few years. And now with TikTok shops, I see a lot of brands trying to drive, growth and revenue through TikTok shops. But I just saw earlier this week that Universal Music Group is pulling its music license from TikTok. So any artist that is associated with, Universal is no longer going to be able to have their music on TikTok. And I'm just curious, is that going to have a downstream effect on the amount of people that are, creating viral videos on TikTok, because they own a huge catalog of music? And from, my understanding of TikTok, a lot of these viral trends revolve around music.
Yeah, I'm trying to think like which artists are not tied to Universal. Like Taylor Swift's got her own
I
thing
mean,
going on, but this is wild.
yeah, I mean, all the major artists are tied to Universal for the most part. And like, when any brand's trying to follow a viral trend, for the most part, it seems like they are, utilizing a licensed piece of music from one of these artists. So I'm just curious what kind of downstream effects this will have. I mean, I do think TikTok Shops is still like a huge and fast growing channel for these brands. But at the same time, too, like some people have compared it to like Shein or Temu, and does it kind of devalue your brand in some sense if you're like, driving like these viral video, conversions through TikTok shops? I don't know.
Do you remember Kids Bops? Like when we were growing up, like those
Yeah.
CDs where there's
Yeah.
people who went over. I think we're going to see the Kid Bops for TikTok. We're going to see people who are not these artists kind of parody and have something that's close enough, people will use it. They're going to get a ton of money because they're basically recording something. It'll be short enough that it'll be within the fair rights usage, and so it won't be plagiarism. And I think basically what's going to happen is there'll be a whole cottage industry of people who, kind of sound like, pick an artist, that get big on TikTok, and these artists don't get the benefit of it.
And they might be generated by AI, right? Who knows?
There you go.
Yeah. Well, I think that is kind of what's been top of mind for me this past week. And it sounds like, for you in terms of these, supply chain technology companies and how that industry has changed so quickly, given the change, I think overall in the interest rate environment and just VCs wanting to have and back profitable startups, if you will. So that's changed quickly. I think let's, talk about really the main subject of this episode, which is jewelry sourcing. We've got a super deep dive on one of the top jewelry brands in the e-commerce world. Announce, who are we going to be talking about this episode?
So we're going to be digging into Mejuri, and I'm going to just give some context. We don't have any inside information. So everything we've talked about is available publicly. We have done sleuthing skills, so we don't have relationships with you guys. This is also not investment advice. We could be completely wrong on this. But, what we were talking, and there's just so many cool stories that are out there. And a lot of times you hear about them when they're, after it's been acquired or after it's shut down, you kind of, these things come out. What we wanted to do was to really dive into cool companies kind of while they're in the middle of their growth story. Look at their history, dissect their supply chain, their operations, maybe suggest some things that we might do differently. But really, what can we learn from it, right? If in this case, if we wanted to start our own jewelry brand, what would we do? How would we do it differently? It's kind of how we wanted to frame up today's episode.
Totally. And I think with this episode, we're taking kind of both sides of the story in terms of understanding Mejuri's supply chain, but also understanding their growth. How did they grow? How did they get started? What's been their best channels? And we also reveal, one of the factories that we discovered through an HTS code, lookup that anyone can do. It's not like we, had any inside information like Aaron is saying. But it's public information based on their import record. So super interesting story here. I want to start with a big question. Do you think Mejuri is going to sell for $1 billion+ based on what we know right now?
I think that's probably the asking price. If they're ready to sell, and if they wanted to sell now, that's probably where they'd be at. But I think I don't know, we'll kind of get to that number.
How did Mejuri get started? What does the kind of start of the brand look like? And then towards the end of the episode too, we're going to dive in to, if you want to start a jewelry brand, here's how you'd go about it. Here's how we'd find a factory. Here's how we'd vet that factory. Here's how we grow that brand. So we're going to tell the brand story, what levers they pulled to grow, some interesting data points that we uncovered. And then we're going to dive into, okay, now knowing this and seeing the potential of a massive $1 billion+ jewelry brand, how would you go about starting that and scaling that today?
Yeah. So our story today, like all great D2C startups, starts in the Great North. So Mejuri is actually a Canadian company. They're based in Toronto, and it was founded by Nora Sakija. And Nora's very interesting. She immigrated from Jordan to Canada, and she's actually third generation in fine jewelry. And she initially came to Canada, was studying industrial engineering and supply chain. And this is kind of like 2013 timeframe. She was working days as a process engineer and working nights and weekends on the business. And, from what I could tell, it seemed like it was, part, this is what she knew. It was maybe a side hustle. And she really kind of struck on a few things from a branding point of view. The first one was that she really wanted to make sure that sustainability was at the core of her brand and what they were standing for. And so with her supply chain background, she actually then went very deep and looked at all the different certifications, all the different types of things that could actually make something sustainable. But the kind of key insight for her was that she recognized that most jewelry, most of the marketing is actually marketed to men to give to a woman. And her perspective was like, we should flip this on its head. And how do we make jewelry that is affordable and approachable and that women feel good about buying for themselves, kind of a women's empowerment sort of thing. And so in 2013, 2014, she and her husband decided to put $5,000 of their savings into that. They started reselling other designs from other people. And, I imagine it was probably more of a typical marketplace. here's Nathan Resnick's earrings design sort of thing, and like that's what they would do.
Yeah, I mean, I think it's such a unique start because, Nora has a background and a family history in jewelry, but at the same time, she saw a gap in the market where most brands were marketing towards men to buy for their girlfriends or wives or, whoever it may be. And so I think it's a unique angle that they saw. And look, it started 2013, 2014. This has been a 10 plus year journey for, their team. And I think a lot of people, honestly, when you look into e-commerce stories, especially when they get to scale, a lot of people start by like either reselling another product or private labeling something, pretty simple, just to kind of like almost get their feet wet and understand like, okay, does this make sense? Is this something I want to do? And then they realize like, okay, well, if I really want to build a brand here, I need my own products, I need my own, designs, because it takes a lot of capital, if you're going out right off the bat to produce your own custom products or your own products, especially at that time, 10 years ago, it was even harder to access suppliers and work with factories overseas.
Yeah. Well, you just think about 2013. Shopify is kind of new, right? Like this is
Yeah.
the heyday of selling on Facebook was new. So it feels like a lifetime ago. But what I think that Nora and her husband did well, and is really kind of a playbook for people today, is they started out by bootstrapping their idea. They went 2 years where they're like, I don't know if they were grinding for 20 hours a day or it was like, 2 hours a month, but they were playing with it. They were prototyping. They were looking at this, and it's something that, you know, I think had they launched this business 4 years later, it probably would have been something where, they raised $2 million as a pre-seed fund, and they went out and they charged off, and they didn't really have that time to test and learn and kind of figure out what they wanted to be when they grew up. They would have had all this pressure just to grow without knowing if it was in the right direction or not.
And probably during that bootstrap period, they could grow a community, they could be more sustainable with some of their marketing efforts and really get more kind of deep rooted in their initial launch. But I think it depends on the timing, right? Like you're saying, I mean, most or a lot of brands, we see raising, pre-seed rounds that just start to launch, right? And it's pretty crazy. But at the same time, if you set out to hit scale, the biggest challenge that, you face and that we're going to dive into oftentimes is, working capital to manage your cash flow.
Yeah. And so it's really interesting because there's kind of two founding dates of Mejuri. There's 2013 when Nora was starting to work on this and to think about it. But 2015 is when the company was, I guess, founded or reincorporated. And that's when she went full time with it. And I think this is a common sort of playbook that we're going to see more and more often, where people are going to take a few years to incubate an idea and really test out and see if they want to do it. But in 2015, they hired a creative director, and they decided to bring all of their design in-house. They said, that's going to be our strategic differentiator. We're no longer going to sell someone else's designs. We want to be our own designer. And in 2017, they raised a $5 million Series A, and they were doing about $1 million in revenue. And so there's a few things that are interesting here. Is one, how many people after working for 2 years would be willing to, sell at least 30% to an investor and give up a sizable amount for co-founders? Because there's kind of sometimes this idea of like, hey, I've put in all this sweat equity, like you should have 2% because of the time that I put back here. And I think just the forward thinking of this and saying, yeah, we could have had a $200,000 business, side business, and it would have been just fine. But we want to do something bigger, and we're willing to reset the cap table because we think that, our smaller stake of, maybe 50% is going to be worth a lot more. Of that 50% is worth $100 million than if it's worth 200K.
Yeah, I mean, I think it's interesting, but I also want to dive into the timing of when they raised that $5 million Series A, right? Because 2017, were those the same years as, Allbirds in a way and some of these, darling D2C
Yeah.
brands when they were raising like massive amounts of capital? And I think too, you had some relatively, big exits in the D2C world in 2017, 2018. And I think like, I don't know, for an e-commerce brand to raise $5 million, doing $1 million in revenue, there's something to be said there. In this environment, that would be super hard to do. But I mean, 2017, there was brands raising a lot more money than that. And especially the past few years, there was brands raising a crazy amount of money too.
Yeah. And it's also, you're doing the numbers here, 4 years from when they started playing with this, right? Like their idea could have graduated from high school, before they raised money and really started to get going.
Yeah, I'm curious, what do you think that round dynamic was like, though? I mean, $1 million in revenue, raising $5 million. Are those investors that are friends and family? Are those like VCs? I mean, what does that round look like? Let's dive into that a little bit, because I think, to me, that seems like, a pretty serious round for $1 million e-commerce brand.
Yeah, I do know that they had a UK firm that basically anchored their Series A. They had taken friends and family, and they had some other investors in Canada that had invested into them earlier. So it wasn't as if they had raised zero money or put zero money into this. They had done something along the way. Their first true venture round was a UK investment firm investing in a Canadian company that sold predominantly in the US. And so it's just an interesting dynamic there.
Yeah, I wonder, what the relationship was with that investor, and how that came to be. But, I think there's something to be said about the timing there of raising that capital at $1 million in e-commerce revenue. I think that in today's world would be very hard to do, especially for a first time founder. I mean, that's hard to pull off.
Yeah. So then things really get fun. So between 2018 and 2020 was the period of kind of breaking out, explosive growth, becoming a household name. In 2018, they saw a 400% growth rate, and that corresponded with their first retail store they opened in Toronto. So interesting that they rode the coattails of their D2C brand into their own retail shop, as opposed to trying to sell into Sephora or Ulta or something else like that. In 2019, they closed a $23 million Series B. And I think the most interesting part about this was that Nora closed the deal while she was 6 months pregnant with twins. And so there's a lot of
Wow.
really interesting stories and things there online about, how she was, um, you know, convincing VCs and finding the right sort of investors who were going to be okay with the fact that she's about to have two very small kids, first time mom. She's going to raise $23 million running a company. And oh, by the way, when you have kids, that definitely messes with your life and your sleep and all sorts of stuff. And so I think it was kind of a testament to the investors that she was able to find.
Yeah, I mean, that's amazing. I want to dive into the revenue numbers, because I know these are estimated, but at the same time, they're pulled from legitimate articles about the brand. I mean, we go from doing about $1 million in 2017 to 400% growth in 2018. So call it $5 million, probably over four in 2018. And then 2019, the revenue is estimated to be $43 million. That's insane growth. I mean, they literally, you know, like eight x their business in 2019, which is like insane. I mean, even if they're doing just 20 million and the estimate is, off by 20 mil, still going from 5 to 20 million in a year is just incredible. I think part of it probably has to do with the category of jewelry, in terms of, it is a very high margin category, and we'll dive into that. But I think a lot of it probably also has to do with their strategy and their fundraising, right? I mean, I remember seeing, their ads across social media, and even some billboards, and they had a ton of engagement. And so I think it's just, I mean, their growth is incredible during this time period.
Yeah, and if only that was the end of the story there. But kind of digging that period, they were one of the first companies that really pioneered micro influencers. So these are people with follower counts of under 100. And so the thought there was that they worked with a lot of these folks, and they gave the brand a very organic, down to earth sort of feel. And yet at the same time, they're not afraid to show that XYZ celebrity loves their content. And, it was one of Oprah's favorite things, I think. And so they kind of had this interesting microcosm where it was aspirational because these celebrities loved it. But because the influencers that they're working with were so small, it became very approachable, and it was something there. So they did a really interesting piece there, just from a branding point of view. And I think from a supply chain perspective, they really figured out that repeat purchasing, giving people a reason to come back and repeat purchase, was really important. And so they drop new products every week. I've got some companies I work with, but the innovation cycle is like 2 years. But this is a new type of product every week. They lean into having lots of limited editions, so they're not afraid of being out of stock. In fact, they have a wait list where if a pair of necklaces or earrings or other jewelry sells out, there's a wait list to know when it comes back in. And so they may have 5,000 pieces that sell and a wait list of 20,000 people. And that's a really good indication of like, oh, we should make this again. And so they do that by being really, really lean on inventory and just embracing the stock out and just turning it so quickly that you get that positive cash flow.
How do you think they turn, and replenish their inventory so quickly, right? Because, their suppliers are overseas. I mean, jewelry lead times are not the fastest. I mean, they're fast, but they're not the fastest. I mean, do you think they're maybe holding some inventory ready at their factory? Do you think, how do you think they manage that? Or you think they just utilize that strategy of, hey, this is limited edition. We've built this brand around selling out, and then there's going to be a wait list, and then we'll sell out again? Or is that just their strategy? I mean, I'm curious how you think the inner workings are behind that.
Yeah, I'm not a merchandising expert or anything like that, but what I can see from my research and what I saw on the website is that it appears that they have kind of a base peak mentality. And what I mean by that is they sell earrings, they sell necklaces, they sell rings, and they have so many different types of SKUs, and they have some best sellers that are their most affordable, their cheapest, whatever, and they are always running those in stock. And so they can afford to have large quantities to hold inventory there because they're probably just using the short-term limited edition thing to drive people to the site. It's an acquisition tactic to get them to the website, and then effectively they're if they can buy it, great. Those are more expensive than normal. It's probably higher margin. They're part of the in crowd if they do get it. But if they don't, they get to sign up for a wait list and say, oh, bummer, here's $5 off or $20 off. Find something else that you like here. And so they've already done the work, the hard work of getting that previous consumer or that prospective consumer to be interested in something that they're making, to fall in love with the design, to come to the website, to start browsing. And so then they're able to say, oh, sorry, we only had 5,000. We'll add you to the wait list, but come here and take a look at these other things that are kind of similar that we think you're going to love. And because they own their design and their methodology there, they are able to kind of iterate on their design slightly so that things all look coherent and cohesive. And it's not as if one style is radically different from another. One of the things that they try to do with their designs is attempt to say that you could have one piece and that makes the outfit, or you could stack it with 10 pieces and that makes the outfit. It's all complementary.
That's cool. I like that strategy. I mean, I would imagine their LTV of each customer is pretty large, and I think must have a pretty high repeat purchase rate. I mean, I think that's like one of the keys to this business is they've been able to create brand loyalty, whether that be through, their waitlist strategy or just selling and designing great products and having great customer service. But I think too, there's something to be said about intertwining that with like an omni-channel type of presence early on where they have their own retail stores, which is really pretty amazing if you think about it. I mean, very few e-commerce brands launch their own stores. It's a really unique strategy that I think enable them to grow even more and have more customer loyalty.
Yeah, I think a lot of brands try to launch stores and end up closing them, but they've made it stick. Just sticking with the kind of the drops every week, that sounds like impressive and it's great from a marketing perspective. But you and I know from an operational perspective, that is a lot of work, right? You've got to get the designs, the manufacturing, the tooling, the shipping, everything has to work perfectly for that drop to happen and to be predictable. And one of the things I dug into when I was looking at that is just how they're doing that. And they were probably one of the first or probably an earlier adopter than maybe they need to be of just having CAD files and 3D printing in order to have fast prototyping so they could see what was interesting, what people were responding back to, and then to kind of say, all right, we know that this sort of ring with a flare is very interesting. Let's come up with 4 or 5 different editions. Maybe we A/B test it with some ads, but then we can ship the CAD files and ship the specs off to our factory and have something built within a matter of weeks.
That's awesome. I mean, to bring all that in-house and imagine their ability to 3D print some of those designs, that would be super cool for their design and development team to be able to, take this idea, turn it into a CAD file, and then print it right there and just see how it feels in real life and see the spec and size. I mean, that's awesome. I love that development process, and it's hard. I mean, most companies cannot do that because most companies are not necessarily jewelry brands that can 3D print their products before they launch. But that's a unique idea in terms of being able to rapidly test ideas through the use of 3D printing that I don't think is used by most brands.
Especially a few years ago. I think it might be more common today, but yeah, it was some really smart decisions that they made there. You mentioned in 2019 the revenue is about $43 million. I would guess that off the 23 that they raised, the valuation was probably around 100 million. So let's kind of just keep that in the back of our mind. Maybe it was 80, 90, but let's just call it 100 million. And in 2019, they were kind of already looking at an IPO and just saying it's in the near future, weren't committal, but that was something they were looking at. With the pandemic, obviously that changed everything. And they were already a D2C business that was doing well. And they had retail shops, which they kind of had to put on ice for a little bit. 2020 to 2023 was really about global expansion for them. And so they chose to take COVID and lean aggressively into D2C. So they operate D2C businesses in North America, Oceania, Europe, Asia, the Middle East, pretty much every major market they've got covered with direct D2C relationships that they've got. They also grew their retail presence to 18 locations. So they've got 5 in Canada, 12 in the US, and 1 in the UK. And one of the interesting things is I really see them up leveling and kind of getting ready for the next phase. And they hired someone in 2023 named Andy Hart, who spent 20 some odd years at Tiffany & Company to run their supply chain. And so they're literally bringing in the right type of caliber and pedigree of people, at least on paper, to really take them to the next level. And I don't know, there's just a lot of things that are going right there.
Yeah, I mean, that's insane, especially during COVID to grow like that internationally. I mean, I would be just super curious to understand how they pulled off that expansion during COVID. And they kind of seem to lean into their retail presence, with 18 locations, growing to that level during COVID. I mean, that is really impressive to do during COVID. And I think, like you're saying, I mean, they brought in a seasoned executive that has direct experience in their industry, leading probably one of the most difficult parts of their business, which is their supply chain, especially at the pace that they're launching new products. I mean, that's what looks like a great hire. I think it's just, I mean, they must have opened up fulfillment centers, in Europe, in Asia, and these other parts of the world. I mean, they're not shipping all these pieces of jewelry from their fulfillment center in America to those places. I mean, how do you think that looks on the back end?
So really interesting. So I did a test shipment. My wife was more than happy to comply. But I assumed that with most of their D2C volume being in the US, that there would be 2 or 3 fulfillment centers here, and I'd get it in 2 days, and that would be that. I was actually surprised that my package came from Toronto. I'm in North Carolina. This came from Toronto. It was 2-day international FedEx International, and yeah, and so it's an interesting piece there because there's no reason why they couldn't be using a similar product and potentially having only one fulfillment center to fulfill globally. This is such that they've done some analysis or looked at it and said, our inventory is so expensive. It's worth keeping tight controls. It's worth making sure that we've got a secure facility, and we're just going to ship globally from a single location in Toronto. Now, they may have something else it would make sense given where they're manufacturing to have something in, say, Hong Kong to maybe service that part of the world. But at least for the US, for my shipment, I was surprised that it came from Toronto, Canada.
Yeah, that's super surprising. I wonder if they're doing some sort of like Section 321 loophole with these shipments because, all their items when shipped directly to consumers are under $800. So maybe they're trying to offset their tariff costs. I'm not sure, the tariff costs off the top of my head for jewelry, but they're probably importing enough volume where that's a significant cost if they were to import that all at once into a US based fulfillment center. So maybe because they know most of their customers are US based, they're potentially utilizing, Section 321, which for those that aren't aware, it basically means if you ship a product into America that's valued at under $800, you don't have to pay tariffs or duties on that product. So that could be a potential avenue that they're taking where it makes sense of, hey, we're going to warehouse for North America in Canada and utilize Section 321 for our customers in America. Because, I mean, I would assume if you look at the bottom line, if they're importing, I mean, let's say their revenue in 2019 was 43 million. So let's say they're spending at least, I don't know, call it $5 million on their unit costs, right? So, I mean, they're probably saving through Section 321, at least, I don't know, 500,000, maybe even $1 million if they
Yeah.
do that, which is interesting to think about.
Yeah, it all depends on if Canadian taxes on jewelry is less than U.S. taxes and things like that. One other reason for why maybe only the warehouse in Canada would be just around tax nexus. And so I don't think this is the case because they have retail presence here in the U.S. But in theory, if they were a Canadian company and all of their inventory and all of their employees were in Canada, in theory they wouldn't have to register or pay taxes or things like that because you'd just be importing individuals on that end. So some interesting things there. One thing that would be interesting to kind of understand with a strategy for them down the road would be fulfillment from their stores. Again, they have these 18 locations. Today, they use them much more like showrooms, as opposed to kind of like in the Lululemon vein, another Canadian company, where it's just, hey, come here, experience it, see it. You can walk out with something. But if you order it, we're going to ship it from a massive warehouse and it'll get there in 2 days.
Yeah, that is interesting. I mean, there's this trend towards micro fulfillment, right? And getting products to someone as fast as possible. But hey, if it got to you in 2 days from Canada, that's impressive in itself. And I bet you that parcel was super light, so they're probably not paying that much for it. But I mean, there's so many different strategies when it comes to fulfillment. I feel like so many different theories, but at the end of the day, I'm sure their, director or head of fulfillment is looking at the net cost.
Yeah, for sure. So let's kind of bring it up to current days. So 2023, their revenue is estimated to be about 160 to 175 million. Again, in 2019, it was 43 million. So basically 4xing the business, through COVID and through this expansion. They reported they've had 1.5 million customers, and they're looking at 22 retail stores that they're going to be opening up soon. They've done about 3.5 million shipments. And so there's a lot of just, they seem to be clicking on all cylinders, and they're starting to position themselves as a more mature company. So one indication of that is they're one of the few companies that I've seen, at least venture back, that has been publishing a full sustainability report, which they started in 2023. Again, kind of goes back to the core ethos of wanting to make sure that is an important part of the brand. And then, it looks like just recently in January 2023, they took an undisclosed amount of investment. So that may signal either a down round or a bridge loan from some existing investors, or it could have been a large secondary sale or things like that. But normally that would just happen between the founders and whoever's acquiring it. So all in all, not an enormous amount of money that they've raised. I think you do the math; it's in the low 30s when it's all there. For revenue of 160, 175 million.
Yeah, I mean, I think these numbers are incredible. I don't know. My gut tells me that was probably some sort of secondary type of round, or who knows, about that round in January 2023. I mean, it seems like with this growth, I don't know how they would. I mean, I guess they could have mismanaged their cash flow or debt, or taken some sort of variable debt and needed to clean up their balance sheet in that regard. That could have potentially happened, but I mean, this growth is phenomenal. I mean, it's really impressive, and jewelry is such a high margin category that, I mean, I couldn't imagine they're not making money unless they just staffed up too many people. I mean, do you think they overhired, or do you think that they run a pretty lean team? I mean, what do you think on that end?
I think everybody overhired to some extent, right? Like I think you're lying to yourself if you didn't during the craziness that was going on the last couple of years. Look, I think that they're clearly upgrading the talent in their executive suite. Um, we talked about Andy Hart coming in to run the supply chain. They made other hires, other acquisitions like that. Those are not cheap individuals, both from a salary and equity position. And so you're going to bring that person in, and then they're going to bring in other expertise to up level around them. And so I would imagine that uh, they are maybe trying to change the shape of their organization, and you're going to see some turnover with folks that have been there for a while, just as they get ready for this next phase of acquisition, IPO, those sorts of things.
Yeah, I would tend to agree. I mean, I think it's their next step has to be either a big acquisition or IPO. I'm super curious to understand, you know, what that's going to look like. I would think they're at the scale where there's only a handful of companies that could acquire them. I mean, we'll see what it looks like because, they hinted at an IPO in 2019, but obviously the market's changed so much during COVID and now they've changed so much again that who knows where they're at, but they definitely have impressive revenue. And, to be able to serve an estimated 1.5 million customers, I mean, that's phenomenal. And if you kind of just do the simple math, I mean, their AOV is like, about what, 50, $60 it looks like on average.
Yeah, I bought the cheapest thing on there, and it was $58 plus shipping.
Okay, so if that was the cheapest, then it's probably even higher. I mean, it's probably
Yeah,
closer to 80 or 100.
they had stuff up there for a couple $100.
So probably even more, which is interesting because if it says they have 1.5 million customers, but on the high end, their estimated revenue was 175 mil, huh? That's interesting.
Yeah, no, it's interesting. So let's kind of talk a little bit about exit options. So, uh, from my experience and just working with startups and building uh, venture-backed companies and lifestyle businesses, there's basically three ingredients that a startup needs in order to exit. Um, the first one is they have to be a profitable, repeatable business. That used to not be the case, but that is absolutely table stakes today. The second thing is what I call a level up capability. So this is something that an acquirer is going to buy that's going to make the acquirer better. So maybe your team is really good at selling on Amazon. Maybe you have unique distribution or retail relationships, or you have IP or patents that are helpful. So some sort of level up capability. And then the third is there has to be a very easy win, early win for the acquirer. So for example, if I'm a D2C brand and I'm in Target, but I'm not on Walmart, and the acquirer has deep Walmart relationships, that's a really easy way for them to take your revenue from 100 million to 180 million and justify paying the multiple that you're looking for. So those are kind of the three things I just wanted to kind of walk through and stack up to see, at least from my perspective, where Mejuri is.
I mean, do you think Mejuri is profitable? Do you think they have this kind of level up capability? Like, what is their expertise? Is it D2C? Is it opening retail stores? Is it, you know, shipping to customers around the world? Um, and is there like a clear, easy win for the acquirer? Probably depends on who the acquirer is, obviously, but I mean, do you think they're profitable?
I think that they're probably very close, if not already there. In other words, I think if they decided tomorrow that they wanted to be profitable, they could do it. And they may be deciding that they're leaning into growth or they're doing other things there, but I think they control their own destiny.
It's a good position to be in, right? What about their level up capability? I mean, what do you think is kind of their main strength?
Yeah, so I think that there's two big things. First, they are their own designers. They are dealing with some litigation right now around some potential copycats of if they copied someone else or someone else copied them. But they are their own designer. You can only get Mejuri stuff from Mejuri, and their retail stores could be repurposed, for the right acquirer to include other products. And so there's some interesting pieces there of again having your own in-house design, and then having a team that can operate 22 retail stores is pretty interesting.
Yeah, I think they have a lot of strong capabilities, and the fact that they brought in, seasoned executives from incredible brands like Tiffany and Co. I mean, they must have really strong executives on their team. So I would say, like, okay, there's obviously some IP there. There's the team, and they have a retail presence, which is pretty cool. And I guess I'm curious, their jewelry is not sold into other stores really right now at all. I mean, it's all their own channels. Is that right?
That's right. You can only get it from them.
Which is really unique. I mean, most brands in today's world that have hit this scale are selling through, Nordstrom or Target or whatever big retailer fits their demographic.
Yeah.
So do you think they're eventually going to sell into these stores or just kind of continue to keep their retail presence?
It's an interesting thought. I mean, I think it depends on what the acquirer is and what they're doing. I think there's lots of optionality. So again, I think that they're close to profitability. They've got like a 40% repeat customer rate. They've got some level up capabilities that would enrich an acquirer. And then the third thing I mentioned was this early win. And so I kind of had fun with these ones. And I thought of three potential scenarios for an early win depending on the acquirer. So the first one was a expansion of the Mejuri line into a large number of retail locations. So kind of exactly what you're talking about. If Sephora or Nordstrom's or even Walmart or Kohl's decided to buy Mejuri, they could then almost overnight take that line, those designs, and put them into their existing retail channels and probably do very, very well. And so I think that that is something that they're intentionally not getting into Sephora so that an acquirer could look at this and say, oh yeah, there's a lot of meat on the bone here. We could just do that and make our money. The second interesting thought was, they could help an acquirer establish a foothold into another adjacent category. So imagine if Ulta Beauty purchased them, then Ulta Beauty moves from beauty only to beauty plus fashion, which is a very adjacent, probably a lot of overlap from a customer base, and some synergies that way. Or if Viore or Lululemon decided to purchase them, they're moving from apparel only to fashion as well. And so there's some interesting pieces that kind of come into that. And then the third scenario was someone who wanted to acquire a retail presence in North America. So if there's a European or an Asian beauty or jewelry retailer without a presence in North America, they may feel this is really interesting to buy 22 locations that are ready to go. They could potentially move some of their other products in there or just learn how to operate in North America.
Yeah, I mean, that makes a lot of sense. And if I was their founders, I would probably rather sell than try to go public. I mean, if you look at the comps for some of these public D2C brands, whether it be, Allbirds or Solo Stove and that whole roll up strategy, I mean, the comps are not good for publicly traded D2C brands. So my guess is their executives would lean towards a private sale.
Yeah, it definitely could. I mean, in my opinion, doing an IPO makes sense if you have a really defensible moat, right? A lot of the things that we talked about, the design could be a defensible moat. So I don't know. It's a tough one. Obviously, if the founders, and the investors are looking for liquidity and they want to keep doing what they're doing, then yeah, an IPO makes a lot of sense. But no matter what, whether it's a private sale or an IPO, the cap table is going to change and the demands in the business are inherently going to change. And so there may be some reluctance to do either of those because they're really enjoying the ride right now.
Yeah, it makes a lot of sense. Let's dive into the back end more.
So like I said, I did a test shipment. I ordered a $58 pair of earrings on Saturday. And the product wasn't promised to ship until Tuesday. And that was with the $8 expedited shipping fee. I was surprised when the shipment was actually fulfilled on Sunday, so the following day, and it was tendered to FedEx with International 2-day. So it was really interesting to me because that told me that they had a fulfillment center that was fulfilling orders on the weekends, which you typically don't see, and kind of goes to this idea that maybe they've got a single fulfillment center that's servicing a lot of brands internationally. The product shipped from Toronto. When it got here, I did a reverse search on where their fulfillment center is, and it looks like they have purchased their own warehouse. It looks like they're operating this themselves, or they have someone who's like dedicated space for it. There are some other jewelry companies that are associated with the same address, and so it may be one of the situations where you have someone who's got a dedicated portion of a warehouse, and they're just operating it for you. But that was very interesting to me. And then the unboxing itself was kind of interesting. It reminded me of one of those Russian nesting dolls, because it was like the earring and the cloth in a bag, right? So that's first level. And then that is in a box, which is in another bag, which is in the shipper. And it was, obviously the supply chain guy in me is like, oh, just put it in a brown paper bag and send it to me in an envelope, and there we go. But I get perception of quality. You want to make it look better. And so, I can see why they did it, and it looks nice. It'll be thrilled when I give it to my wife. But then the other interesting thing from a fulfillment point of view that they did is they actually had a custom card that they printed the order number on there. And so it was a small kind of index card that was printed out, and they said, here's your order number if you need to do a return or exchange, even if you were gifting it or doing whatever, which was, I hadn't quite seen that before, because usually you either get the big packing list, which is ugly, or you just don't have the order number. And so it's kind of difficult. You're reaching out to your customer service people and trying to work out what's there and just hoping that you have it in your the order number in your inbox to do that exchange. But I like the card touch they included.
Yeah, that's cool. I mean, I think it's kind of interesting though from a packaging standpoint, because they have a sustainability report, but then they have such a unsustainable packaging. It seems like, I mean, to have that many layers of, cardboard and boxes and all that crap, it's like, I understand you want to create this luxury experience that's memorable, but at the same time, you're publishing a sustainability report and your packaging is the opposite of that, in my opinion.
Like I think I'm sure they're very responsibly sourced bags and corrugate and things like that. Like things have to look nice. If you're going for something that potentially someone spent a couple $100 on, you can afford to have recycled paper or something just to make it feel good.
Yeah. Yeah. No, it's good perspective. What about on the factory side? Where do we think these products are coming from? How do we go about finding that?
Sure. So there was a lot of really interesting things that were going on. Obviously, they're partnering with factories that are part of the Responsible Jewelry Council. They're looking to do third-party validation. They've got responsible mining assurances. They're doing some interesting things with lab-grown diamonds. But the main factory, according to import uh, records, is a company out of Shanghai. And I'm not even going to try to produce it. I'll let you do that one.
Yeah, it's kind of a weird spelling, even for Chinese. It's Xiaou. Usually there'd be like a Y in there or something, like Xiao Yu or Xiao. Yeah, I don't know. It's interesting spelling, even from a Chinese perspective. I mean, to me, maybe this is, some sort of importing or exporting company from China as well, because I mean, I don't think their factory's directly in Shanghai, obviously. Maybe, maybe somewhere outside or around there, but definitely not in the city. So I think it's
Yeah.
probably, a bit of a holding company, if you will, that's over there.
Yeah, I'm gonna Google it right now because I'm intrigued. Yeah, it looks like they no they actually produce stuff. So that is the actual address. So they own a lot of different things, a lot of it from machining, steel, but then they're also doing fine metals here too.
Well, there we have it. We'll put the website in the show notes if you want to see where some of their jewelry comes from.
Yeah. Although they're not leading with that, so you still may be onto something as far as the actual factory, because most of what's on the website is galvanized steel, zinc alloys, things like that. So this is probably a bulk manufacturer providing a lot of the raw materials, and maybe there's some finishing happening in Canada or somewhere else in China.
Yeah, that would make sense too. That would definitely make sense. Well, I think this was a really unique deep dive on how they started their supply chain, what their growth looks like. I mean, it's an incredible story. I'm pretty impressed, especially when it comes to their marketing side. I think the fulfillment side is interesting, that a US order shipped from Canada. I mean, my guess is either they just have, one central fulfillment center, or they're utilizing Section 321, or there's got to be some reason for that. I think that's a really interesting perspective that we uncovered, because most brands, that are selling in America, they have US based fulfillment. Um, that's really unique. I mean, even if you're using Section 321 in America or from Mexico, you could set it up where you're shipping from like a US address, which is also kind of interesting. Like you're not going to ship from
Oh,
a
interesting.
Mexican address when you're using Section 321 from Mexico. So that kind of makes me think that they aren't even using Section 321. I don't know.
Yeah. So I kind of want to flip the script, Nathan. So you have helped so many companies source and get started and things like that. I'm sold Mejuri is a great business. We should get into jewelry. If we were to start this, how would we do it? Where would you start?
Yeah, I mean, I think number one, I love their development process of creating CADs and 3D printing because I think what you see on screen versus what you get is always so different. And so the ability to do that with jewelry is so present that that's a no brainer. So, number one, I'd probably just go on Upwork, hire a CAD designer for a few $100 and start making iterations of jewelry designs that I like. Then I would go to like a local 3D printing shop, or I know there's like 3D printing shops online that you could just like send your designs to and they'll print it and ship it to you. I would start that way. Like, do I actually like the feel of this jewelry in person? At Sourcefy, we've helped a ton of jewelry brands optimize their supply chain and cut unit costs. I mean, I know one brand in particular we've saved like over 30% for, which was pretty awesome for them. But at the end of the day, jewelry is a high margin category. I mean, if you're selling $100 ring, you're probably not spending more than like, you know, 10% of that to produce it, if that. I mean, most jewelry margins are like 90+% gross, which is awesome. Sometimes even higher, which is amazing. So I think there's a lot of margin there. I think for the most part, most jewelry brands are spending a lot on marketing and to scale their brand and build that community. But from a supply chain perspective, I think jewelry is great because number one, you can test and actually like test the physical product before you even find a supplier. Number two, it's pretty easy to find suppliers in jewelry. Sourcefy has a huge network, which is awesome. But number three, they're pretty quick and fast to sample once you find a supplier. And number four, production timelines aren't too long. Number five, in general, the items are very small, so they're easy to ship. Though, I guess they could be a little bit heavier, but not that heavy. I mean, overall, jewelry for e-commerce is an amazing category because it's high margin, lightweight, and pretty agile to manufacture.
No, that's super helpful. Yeah, as you're going through those lists of things, I'm like, yep, lightweight, tick. Yep, high value, tick. Like, it's just, it's amazing that there's e-commerce businesses that aren't jewelry, right? Like, there's just so much good stuff there.
The only thing that I think is missing for jewelry as a category that's probably really hard to do with jewelry is repeat purchase rate, right? There's no like subscription. Like, I don't know how you would put someone on like a jewelry subscription. Maybe you could do like a surprise box or something like that. But like, I mean, if jewelry for some reason, like if you create a jewelry brand that could have subscription, it'd be like home run. I mean, you'd have to do this. But I mean, nowadays with e-commerce, I think subscription is such a key, especially to manage cash flow, that I think that's the only thing this category is missing.
Yeah, I definitely, you know, we talk with a lot of influencers and people that have ideas for business they want to start. How often do you see influencers come and say, "Hey, let's do a jewelry brand"? Is this one of the categories that
Uh,
they pick up and say, "This is what I want to do"?
yeah, I would say pretty often in general because it's low cost to get started and it's pretty easy to ship and they can really effectively bring their designs to life. So I would say pretty often. I mean, there's so many simple ways to go about jewelry, whether it be just engraving something instead of doing like custom designs. There's so many different ways to go about it. And there's like standard ring sizes too. You don't have to go out and reinvent the wheel with jewelry, which is pretty awesome.
That's cool. Can you talk a little bit about like what the jewelry manufacturing ecosystem looks like? Is it something where there's lots of little players, a few big ones that clustered in certain geographies? What's that look like?
Yeah, I mean, most of the jewelry manufacturers that I know are in China. I know there are some other ones that are more unique, like in India or Vietnam, but I think most, scaled jewelry production is done in China. It's a similar dynamic, I think, with most categories where, you might have a manager that was at a huge factory, want to go start their own factory. And so they start, and typically they start smaller. And that's how you have, these manufacturing bases that grow around one city. And it's such a interesting and phenomenal aspect, I think, of manufacturing, where for whatever reason, a lot of factories that produce the same type of product are in the same city. And that's typically because, those managers went out and started their own facility, but also from the raw material standpoint of, hey, this is where the raw materials are. This is where we're going to produce these products. And so I think that's, a really unique perspective when it comes to jewelry. But raw material jewelry could come from all over the place. I mean, it's not like a very rare material that they're using in most jewelry, but I think people would underestimate like the capabilities of factories to undercut their quality. And so quality control, I think, is super important in jewelry because, when you get a piece of a necklace or a ring or whatever it may be, when you get a new piece of jewelry, like just by touching it and seeing it, oftentimes you won't know, like, okay, is this 100%, gold, or is it coated gold, or is it like, sterling silver? Like, what material is it? And a lot of times you might have factories like kind of uh, mismatch or miscategorize the material that they're using to save on cost. I mean, at Source5, we've caught past factories that our clients were using where, they said, hey, this is 100%, stainless steel or whatever it may be. When you actually do a lab test on it, it's not, right? And so I think it is really important to check your quality when it comes to jewelry, because there's a lot of shortcuts that factories could take with, raw materials that would be overlooked just by, your feel and by your eyes. But if you actually do a lab test on that piece, you're going to be like, wow, this is 60% nickel and, the 40% what it was supposed to be. So you have to watch out.
Yeah, it's like the top of a milk jug, the little circle part dipped in metal, and say, "Here's your ring."
Mm-hmm.
That's what I'm imagining. I, in my research, I came across this difference between like costume jewelry and fine jewelry. Are you aware of like what's the difference between those two?
Yeah, I mean, I think for the most part, like fine jewelry is a certain category that's very high end, like very refined manufacturing process. Price points are higher. That's from my understanding. I think as these e-commerce brands have grown, some of the differences have become a bit blurred. But like fine jewelry, you're typically talking about like wedding rings or diamonds or stuff of that nature. And refined could be like a refined type of material that is not a straight mineral or diamond that is from the ground.
That's helpful.
I think the hardest part is marketing. To be honest, I think if you come to Sourcify and say, "Hey, I want to start a jewelry brand and I have 5 million Instagram followers," I'd say, "Hey, this can be easily a multi-million-dollar brand. Let's start and let's get the ball rolling." Or if you're a jewelry brand right now and you've had supply chain issues, like Sourcify has such a strong jewelry base that we know this category inside and out. We probably already know the factories that you're working with or thinking about working with, that I know we can have a lot of success with the brands that we work with in this category, because we've worked with some of the biggest brands in the jewelry category. So yeah, I don't wear too much jewelry, but I do admire the category and know a lot about it.
Sounds good. Well, this was a lot of fun. I enjoyed nerding out and always talking operations with you. I think my wife enjoyed being a guinea pig as well. So I think she's looking for us to do more jewelry episodes, or maybe, I don't know, something else fancy. This is great. Thank you so much.
Yeah, next one we're gonna do diamonds, right?
Yeah, I think diamonds and Teslas and Versace and whatever. We'll see.
There we go. We're just gonna go higher end, higher end, higher end, so we get our significant others more and more gifts. Aaron, this was awesome. Everyone, thank you for tuning in. This episode of E-commerce on Tap brought to you by Sourcify and ISBA. If you have supply chain issues, reach out to us. If you have questions, reach out to Aaron or I on LinkedIn. And please like and subscribe to E-commerce on Tap. It helps a lot. Leave a review. If you learned anything, take a screenshot and tag us on Twitter and let us know what you learned. We're always here to provide feedback and look forward to catching you next time on E-commerce on Tap.